Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This webinar is going to be like an extension of what we've done previously. You remember there's a time we looked at engulfing candles. We looked at the best way to use engulfing candle for entry, but we didn't expand so much on it. So today we want to build on where we left it the other time. First, I'll start by defining what an engulfing candle is, and then I'll move forward on how we can use that to enter trades correctly. So an engulfing candle is just a candle if, for example, the immediate previous candle is greater than the previous candle itself. That is, in all aspects, the high of that candle is higher than the previous high, the low of that candle is lower than the previous low, and the size of the body of the previous candle is greater than the size of the body of the previous candle, sorry. And then the color of the previous candle, immediate previous candle, is opposite the color of the previous candle. Okay. I don't know that you understood what I've said. That becomes an engulfing candle. So I'll draw that here so that you see whatever I was talking about. If you have something like this, you can see, assuming this is a green candle, we have a green candle like this. We have a green candle like this. So we mark this also as green so that you're able to see what I'm talking about. That is blue, so that is green. So if you have a candle like this, then the previous candle is smaller than the previous one and it has a different color. That is, if the current one is green, the previous one should be red, like this, and then like this. So this is red. This becomes a perfect example of an engulfing candle. So you can see basically that the size of the current candle, which is the green one, is way bigger than the size of the red one, and the high of the green one is higher than the high of the previous one, and then the low of the current one is lower than the low of the previous one. Then you have the size of the body of this candle being greater than the size of the body of the previous one. Then this is an engulfing setup. So this becomes a very, very good engulfing setup. And what it means is that the price may likely continue to the upper side. So anytime you find a setup like this, just know that this is a very, very good sign that the next few candles will likely continue in that direction. So when you have something like this, just know that the next few candles will likely continue in that direction. Okay, so this is the normal knowledge. This is how most people trade engulfing candle. This is how the books say. This is how almost everyone puts it. But in my own experience, that anytime you enter a trade based on just an engulfing candle or a setup which looks like this, the price will likely go against you and even hit your stop loss. So if you enter a pattern, the candle which forms the engulfing candle forms here, do not just enter trade at the opening of the next candle. Instead, wait for a pullback. That is, wait for price to pull back up to either this level here, where the previous candle was, or closed or opened here, or wait for a retracement at least up to this level here. Okay, I know you're wondering how comes we are waiting for retracement here or here, not somewhere in between or somewhere in between. So our main focus here is we look for places which were significant on the previous candle, places which actually marked a boundary in the previous candle, like the high of this candle was a boundary, the opening, the close, so this is the opening of the red candle was a boundary, the close of this candle was a boundary, and the low of that candle was also a boundary. So I'm not just waiting for a retracement up to any level within this candle or even half of it, because some people say that you're supposed to wait for price to pull back up to the half of it. It's okay, that still makes some sense, but in my opinion, there is no basis with which you're putting the pending trade here, I'd rather I put it here. So we have this here, we have this here, the stop loss is still fixed at the same place. So if the price is to go your way, that is, if the price is to go your way the correct way, then you pick your point of entry plus the size of the entire body of the engulfing candle. That becomes the take profit for that trade. Does that make sense? Whatever I'm saying, does it make any sense? Okay, I'll repeat that again. For example, assuming you enter a buy here, your take profit should be at least the size of the body of this green candle here. And if you enter here, your take profit should be at least the size of the body of this candle. In both cases, your stop loss is fixed at this point here. So whether you buy here or you buy here, your stop loss is still fixed at this price, which if you have to refer to real actual price, it's actually 62.694. So we'll have our pending buy limit, the first pending buy limit, and then the next pending buy limit here. So one more thing. This is just for proper risk management. If you want to trade maybe a lot size of 1, you are that person who likes trading lot size of 1, and you are trading an engulfing candle, don't just find yourself entering the entire lot size of 1 at this price here. Do not find yourself entering the entire lot of 1 here. So enter a quarter of it here, then enter the rest here. All of them have your stop loss here. So for example, if the first one, let me draw the size of the green candle. That's the size of it. If you enter trade here, your take profit needs to be at least here. At least there. So I'll also make this to be dotted so that we're able to see exactly whatever I'm referring to. And then just a second. So we have that. And then the next one should be the same size. So this should be the take profit for the next trade, the second trade now. So you can see what is happening here. You can see entirely what is happening. That after you enter the first trade here, or if the price is to pull back and it pulls back up to this point, you'll enter a quarter of 1, which is 0.02 point something, or maybe 0.02 or 0.03. You'll enter the volume here the first time. Then the next trade you'll enter is actually 0.7 at this point here, which means if the price goes your way, the one for 0.7 will go your way much quickly compared to the one which you entered a small volume. So because what we want here is to make money eventually. If you buy here, the one with the biggest volume will start making more money and will even make more money, while the other one will also making money, but not as fast as the previous one. So we'll get out of the bigger one faster before we get out of the smaller one. So something else, when you take profit here for the second trade, drag your stop loss for the first trade to 0.0 so that you're losing nothing even if the price goes your way, because already the trade which has the biggest volume has actually hit your take profit. So the next one, you don't lose anything. So you drag your take profit at 0.0 and then you let it run. That is simply how I use the engulfing candle for entry. You don't just enter because the price the current candle has engulfed the previous, and that's not the best reason for entering. You enter because the price has pulled back to us at a boundary. That is where there was some significant reversal from. So as I mentioned, this is the boundary, this is the boundary, the open price here is the boundary, and the closing price here is also the boundary. Does that make sense? So we have here the boundary here, we have here the boundary, and we have here the boundary, and the other one the boundary here. I hope that makes a lot of sense. Okay, so if that makes sense, then I want us to look at a case where now we are looking for sell positions. Let's see where the price is engulfing to the lower side. I'll delete the horizontal lines. Just a second. Delete that. Delete that. We delete that. Delete that. Then delete that. Okay. So the for a sell, the candle which is currently green should be red, like that, and then its tail also must be red. So somebody may want to ask me, what of a case where the candles have the same appearance? That is, this is red, this is red. So I don't consider that as an engulfing as such, but some other people may consider it as an engulfing. I personally don't take this as an engulfing candle. So we have this as green, and then we have also this as green, like this. So you can see this is now a case where the bigger candle is actually red in appearance. The bigger candle is red in color. This is red in color, and then the next one is green. So look at how this candle form. You can see that the high of it is higher than the previous one, the low of it is lower than the previous one, and the open price of this candle here is actually higher than the closing price of the previous one, and the closing price of the same candle is lower than the opening price of the previous one. Then the size of this candle here, the red one, is actually way bigger than the previous one. So this becomes a bearish engulfing candle. This is how you define a bearish engulfing candle. So you remember what I said before. When you see a setup like this is not a suggestion that you're supposed to enter trades immediately. It does not in any way mean that when you see something like this, you're supposed to just enter trades at that time. No. You are supposed to wait for price to give you a clear sign that it is true we are heading to the lower side. You're supposed to wait for a clear sign, and the best way is to wait for price to pull back at least upwards up to some areas. So some books say that you have to watch for in between the green candle. That is, the price needs to pull back up to in between half the size of this red candle here. That is true in some cases, but it's not true for all cases. It's not all the time that is necessary, that you're supposed to watch for price to pull back up to that point. This is my own suggestion. Wait for price at the opening price of this candle here, and also wait for price at the opening price of this candle. I mean the closing price of this candle here. So if the price pulls back and touches this level here, this should give us the correct place to look for a sell from. Our stop loss is fixed at the high of this candle here. So the idea why I have two lines is because we are not just entering one whole trade on this candle. We are entering two trades at different times. So the first one is here, the next one is here. Both the two trades, our stop loss is at the high of this candle, which is this black line here. So as I mentioned, with the case for a buy, when you enter sell here, don't enter the entire volume. That is, if you're doing a volume of maybe 10 or 5, don't enter the entire 5 or 10 here. Enter a quarter of it here, then enter the rest here. All of them have your stop loss at the high of this candle here, which means if the price now pulls back up and touches this level, you'll enter the next one, and then you have both of them in your stop loss here. If indeed the price is to go up and stop you out on everything, you're not going to lose everything. Instead, you will lose a very, very small amount of money compared to the person who entered the entire volume when this candle closed here. So one more thing, the take profit is actually the entire body of this candle here. So that means if you enter trades based on the first line here, your take profit should be somewhere here. It's the same size, But if you enter trade based on the second line, then your take profit should be somewhere here. Should be somewhere. So you will enter sell, expect price to continue up to this point, or you'll enter sell here, expect price to continue up to this point here. So that should be it. That's just my opinion on engulfing. That's how I basically enter trades on engulfing candles. I don't just enter when the candle closes. I wait for some pullback, and only if the price pulls back up to these levels here. So thank you very much. This should bring us to the end of today's session. We'll meet again next week at the same time. So thank you. See you.